Hi, I'm Brien Lundin, and I'm conducting here a backstage interview for the Metals Investor Forum. Conducting this interview with Vox Royalty, one of the companies I featured in my session recently. And we have Spencer Cole here, Executive Vice President for North America for Vox Royalty. Vox is traded on the TSX Venture Exchange, symbol VOX. And Spencer, Vox has been recommended in Gold Newsletter really since its inception, which hasn't been that long ago. And as we know, there's been just a plethora of new royalty companies springing up onto the market, on the junior mining share market, like mushrooms after a rainstorm. And what I tell my readers is that there's really, I think, three key points that you want to check off for any royalty company before you make an investment. One is, because the field's starting to get a little crowded, you want one that has some real value creating, differentiating factor to it. Second, you want one that's focused largely on producing assets or near producing assets. You want to get that revenue closer in the lifespan of the company or nearer in the lifespan of the company, because there are a lot of projects out there that will never produce anything. And you want to take this kind of vaporware out of the consideration when looking at a company. And thirdly, you want to get into these royalty companies early in their growth cycle when they're the cheapest, because as we know, the whole point of having a royalty company is precisely because they're very highly valued by the market. So if you can get into the company early on in that growth cycle, you can really benefit much more greatly down the road. So what I'd like to do in this discussion is kind of go over those 3 points and see how Vox does indeed check off those boxes. First, the differentiation. Vox is different. That's what attracted me to the company as both an investor and recommending it in our newsletter. Can you talk about how you're differentiated from the rest of the pack?
Yeah, sure, Brian. That's a great question. I guess one of the key differentiators that between Vox and a lot of our competitors is, I think, in terms of how we source and evaluate deals. We've got the benefit of the company's been and the team's been around for 7+ years, so we've seen a few cycles come and go. Add to that the fact that our management team is a team of technical professionals, so mining engineers and geologists. So that, I guess, mitigates the risk of us falling in love with the wrong assets that perhaps might not actually get developed. And then thirdly, our proprietary royalty database, which numbers over 7,000 unique royalty opportunities, is really growing by the day. The combination of that track record plus the technical team plus that what we believe is the world's largest proprietary royalty database, all those three things combined allows us to consistently execute value accretive transactions at faster pace and at more disciplined prices than our competitors. So we've got so many opportunities that we're evaluating at any given time, Brian. We never need to stretch for a deal. We'll only enter into an agreement to do a transaction when we really feel like the value is there for our investors. So I'd say those are some of the differentiating factors, and particularly around, I guess, the database and how we use that.
Yeah, I think that's really interesting, and we could talk for a long time just on that factor. But in your database, you have royalties that companies, in some cases, don't even know that they own. I think you bought one royalty from an auto parts company, and I think the list goes on, and non-related companies are completely unrelated to mining, and they don't even know that they have these royalties, and therefore you're able to go in and offer them payment for these royalties that they didn't know exist. So you don't have you're not bidding against anyone else for that royalty that your competitors really don't know exists. Can you talk a bit about your focus, because I know this is a point of focus for the company, on producing royalties and near producing royalties, and what that means for you in terms of near-term cash flow in the growth curve this year?
Sure. So I guess, as I mentioned in our main presentation, our sweet spot, Brian, really is acquiring royalties that are between 6 to 18 months away from first production. That's where we find consistently the greatest value for our shareholders. So when you think about projects and royalties in that sort of stage of the development life cycle, there's just a huge volume of catalysts over those 6 to 18 months as they come into production. So I think if you look at our growth curve, really since the start of 2019, which is when we really, turned on the afterburners, so to speak, and started executing, a really exponential volume of deal flow. Over that time period, we've done 18 separate royalty deals, and a number of those deals were over royalties that were in that sort of 6 to 18 months from first production timeframe. So this year, at where we stand today, we've got 4 production stage royalties, and then as we look ahead over the coming 6 to 9 months, we've got operations such as the Segilola gold mine in West Africa, which Thor Explorations are in advanced stages of construction on. So they're targeting first gold pour in Q2 of this year. Likewise, we've got the Bulong royalty, which is a project that's in Kalgoorlie in Western Australia that Black Cat Syndicate is targeting first commencement of mining in Q3, Q4 of this year. So I guess those are two projects that are, materially de-risked. And then in addition to those two, there's a number of other royalties that are over satellite ore bodies that could come into the mine plan this year and feed existing mills. So I guess it's just going to be a huge volume of incremental cash flow and producing royalties just organically coming on stream over the course of this year.
Yeah, and I think that's been the buzz in the market about Vox and lately is that this is going to be a big year for the company. And you kind of addressed our third box to check off, get in early for a company before it experiences that very steep growth curve. So how long has the company been publicly traded again?
Yeah, only 7 months, Brien, but the company's been around 7 years, but only publicly traded for 7 months. So still very much a ground floor opportunity.
Yeah. Yeah. And still trading very close to the share price, thanks to the volatility in the market, still trading at very close to the price at which you started trading 7 months ago. So it's very early in that growth curve. And I think that's the important point. What we're looking at is, in general, you want to get into royalty companies early on in their life cycle before they hit that growth curve. But what we're seeing ahead for Vox is that all of a sudden this year, we're starting to see, or we'll start to see, those bottom line revenues coming into play. And precisely because you've been in business, as it were, acquiring royalties for years, now we're hitting the sweet spot here. A lot of companies out there, you still have to look 2-3 years down the road before they'll start getting any revenues. And these are some highly regarded royalty plays. You're right there right now. I know you can't really quantify the level of revenues you're going to have, but can you give us an idea of, say, what kind of multiples you would expect as you get to that kind of critical mass of royalties and revenues coming in?
Sure. So I guess, we haven't provided formal guidance for 2021. So what I would suggest is that I think because we're covered by 4 separate research analysts, they're doing a fantastic job summarizing, particularly the advanced stage royalties in our portfolio. And so if you take, consensus revenue of going from 2 million to 6 million to 8 million over these next sort of 3 years, and if you apply, what some of the revenue and cash flow multiples the sector trades on, depending on who you're benchmarking, a number of our peers trade at anywhere from, call it 20 to 35 times cash flow and revenue, depending on how much growth is embedded within their portfolio. So I guess as we look ahead and as those cash flows start to hit the bottom line over the course of this year, and as the market understanding of a lot of our Australian royalties really comes to fruition, we would expect all of those things to present, quite a bit of upside or alpha for shareholders.
Yeah, this really applies, or it really fits the type of investment I often tell my readers about, that buy it, set it, and forget about it, and then come back in a couple of years and you'll be very pleasantly surprised. Another thing we haven't really touched on is the fact that because you're diversified across a few metals and geographically and through a number of different companies, really an awful lot of companies, an awful lot of projects. That also lessens your downside risk a bit. So great way to play the new bull market in the metals that we see here, right here in front of us, and to play it in a very rewarding fashion. Spencer, thank you so much for being with us today and giving us the Vox Royalty story.
Thanks so much for your time, Brien. My pleasure.